Welcome back, man. Another episode of Wealth is Gangster. We talking stocks today. Fam, what's up?
What's up?
Yeah, man, just chilling, just chilling. I was over here looking at just going through some stuff. I didn't even realize that you ever get some let me share. Let me share this on the page that we went live. What stock was I was about to talk to you about? Oh, today I want to go over like the mindset because like it's and I guess I used to be no, not really. I don't think I was fully like this, but a lot of people I talk people only excited about stocks when they're going up, and that's
Mhm.
not the way to get rich off stocks. So, but when they're going down is when people freak out, and then don't nobody want to be a part of it. But that's the part. That's the part that makes you rich when you buy it going down. When you buy it at its lowest. So I want to talk about that. I want to go. I want you to kind of give us your point of view or try to explain it to somebody that's like really lost. Get excited when it's in green, but get sad when it's in red. That they're missing the riches. If you're only excited, if you're only buying stocks in green, if you're only there when it's green, you're missing all the money.
Yeah, you are. It's the thing about this is it's so counterintuitive to what people think, because red and green, they use that for a reason.
Yeah,
They use those
yeah.
colors for a reason. They use them because red is supposed to mean bad and green is supposed to be good, right? So when people see red, they automatically think bad. So that's why people sell stocks. But yeah, they don't realize that that's when they lose money. That's when they lock in losses if they're down, or it gives them a chance to cost dollar average if they're already in it for lower than what it is or higher. It doesn't even matter. If you buy the right stock, it doesn't matter really when you buy it. It's going to keep going up. So you just it's so counterintuitive that people have to retrain their minds to think differently. And a lot of people just don't want to do it. It's not that they can't, it's just that they don't want to, because they stuck in their ways. And that's the whole thing about this and any other thing about wealth. People are stuck in their ways and they're not open to finding out new information or doing stuff differently. And that's why they're stuck in the same thing that they're stuck in over and over, and wondering why they get the same result. They're doing the same thing and expect a different result. You're crazy. That's
Yeah.
that's what it is. So um, yeah, people I don't really know what to tell them. It's a hard thing to do because you've been conditioned for this your whole life. Like
Mhm.
I said, the red and the green, all the triggers, the news with stocks when it's going down, how they make it seem like the world's coming to an end, all types of stuff. So you have to be able to put all that stuff aside and trust yourself, basically. Trust the research that you've done and know what you're doing, and trust that the company, you bought a good company, and that it's going to keep going up and keep making moves to improve not only your life, but the life of other people, to keep them in business and keep that cash flow coming.
And the bigger thing, even in stocks and business, we really don't realize how much wealth is made in crisis. Like the billionaires became richer during the pandemic. Like every time it's a housing crash, and like real estate people get richer during the crashes. So we hear about it, we see it, but for some reason we cannot put ourselves in it to do it.
Yeah.
You know what I'm saying? And that's the part I'm trying to figure out. How do we like? I mean, I understand that we always talk about it's our mindset, but how we get people over that hump to be happy? Like a prime example, my sister, I got her in the stock. She was happy when it was green, right? Just calling me,
Hmm.
oh, it's going up. And then I hadn't talked to her for a while, and then because the market went down.
Hmm.
So I told her when she first started, red means go shopping. I said, and I always tell people the same example. If Jordans were $300 a pair today, if it go down to 200 pair, you might buy two. You might
Hmm.
buy a couple if you really love Jordans. So I try
Hmm.
to put it in ways that they can kind of understand it, but for some reason it's still hard to pull that trigger when you're in it. And she just like when it went red, she just froze. She didn't even. I'm like, that's today. I thought you were supposed to be shopping. I told you red means go shopping. It don't mean
Hmm.
stop and freeze. But you excited when it's going green. But and my thing is, I had to, like I say, even when I was at the very very beginning, I understood it. But now I like cherish it and really love it. You know what I'm saying? I love red
Hmm.
days. I mean, of course, we all love green days, but
Hmm.
when you realize that the money that you can really make in the future comes on the days when the markets are crashing, on the months when it's going bad and this and that. So you kind of embrace it and you look for it. You don't be. It sounds funny to say, but you don't want it always up and green. Especially if it's some stocks that you really want and you didn't get in where you wanted to, or
Yep.
you want that chance to get back in at a certain number.
Yep. Yep.
So it becomes something that you embrace and something you love. But it's crazy because I'm like, we as a whole, once again, we talk to everybody, but when I'm talking about the people that I'm trying to teach, it's like you're not gonna make money if you. I mean, it's crazy because it could be shooting to the moon and they'll buy. They'll be like, "Oh, I just bought some more today because it's green. I just bought some more." But I'm like, but it's gonna come back, and then you're gonna be sad when it retracts a little bit because you're buying it at the highest point. Now, if you average, like that, a dollar cost averaging, that's one thing. But to do that, you understand you're gonna buy it high, you're gonna buy it low, but overall, it's gonna balance out. So if you got that mindset, that's fine. But it's just it's the people that only buy when it's green, when they're excited, and then they freeze when it's in red and they don't do nothing. And I'm like, you missing the whole boat. You missing the whole boat, So that's something that I think I want to really figure out a way to like break it down, especially as we even in the project we're putting together for the youth, is we can some kind of get creative to talk about, like, to even raise them in thinking the red days are good days. You know what I'm saying? So
Yeah.
we'll put that like in the project we're working on, to figure out, to kind of try to program them earlier to understand in the market, or not even just the stock market, like I say, real estate and a lot of things. When it's bad, that's when let's say blood in the water. That's when they come. When everybody's excited, that's when the heavy investors, they don't even touch it when it's sky high and everybody's jumping in and everybody's reposting it on Facebook and everything. People getting ready to take profits now because everybody's in it. It's too late. You done missed the boat. I tell people all the time, by the time it makes Facebook and everybody's excited about it, it's about to crash, because the people that's been sitting in it like me, it's time to shave a little bit off the top. It's time to hit some of y'all casual investors across the head now. You know what I'm saying? So that's something that we really I really been trying to figure out how to break it down to them. And I mean, I think I have. I think it's more of just you got to get over that hump yourself. No matter how you tell a person, if you're not really conditioned, until you get over it to understand, like, I've always been cool with it, but now I love it. So I guess that was something I formed on myself. And now I just cherish and look for it. I actually, if it gets too green too many days, I'm like, dang, on certain stocks, you know what I'm saying? Like, hey, come on back, like a few stocks down there, I'm like, you need to come on back to me a little bit, you know what I'm saying? So I can get a better number, So that's just a mindset, man. So I was trying so tonight we need to talk about just the mindset it takes to really build wealth. So what would you say, like, if you're talking about books, if you're talking to someone, I don't know, books, education, even like what you're putting together, what would you tell somebody to start if they're going through that and they know it? Because a lot of people know it, but they just can't get over the hump. What would you point them to, or what kind of advice would you try to tell them starting off?
I'll tell them to invest in themselves first of all, and that's all types of knowledge things, right? That's books, that's courses, that's doing it yourself. Like, there's free trading platforms out there that you can get on and play with the market and stuff. There's all types of stuff out there. You just gotta do it. When it comes to the mindset thing, kids are easy because they're still young. So whatever you're gonna tell them, they're gonna follow that. So that's easy. It's the adults that's the hard part, right? Because I'm not gonna say that everybody thinks they know better than you, but they know better than you. They're like, oh, he don't know what he talking about, blah blah blah. But for that stuff, people just got to be shown. They just gotta see it, and they got to see it for themselves. Because everybody thinks, okay, yeah, I know people got rich on stocks or whatever, but that's them. They got something I don't. They got a magical power, or they got an insider. They know something I don't. You know what I'm saying? So that's how people think about the stock market. Like, oh, Martha Stewart, insider trading, blah blah blah. All this stuff. Yeah. Like, there's some magic secret. And the secret is start. Like, that's the secret. You just got to do it. And then once you're in it, that's when you figure out the ins and outs, the nuances of everything. And like, okay, oh, I did this. I messed up. I should have did it like this. And then you learn, and that's how you get better. But I don't think people don't want that curve. We want to be rich now. Yeah. We don't want to wait. But waiting is what you need, really. It's you getting money in the market and you'll have it when you need it. It's not a, you know, because the whole thing again with mindset, right? Like if I give you $1 million right now, you gonna blow it. You gonna be broke next year because your mindset ain't the same. You know, you gonna have money. All you gonna think is I'm gonna spend it. I'm gonna spend it. I'm gonna spend it. I'm gonna go buy a car. I'm gonna go buy a house. I'm gonna buy shoes. I'm gonna buy clothes. Blah blah blah. But you're not buying nothing that's gonna replenish that money. You know, so that's what the difference is between assets and depreciating assets. Most people buy depreciating assets, while the wealthy buy wealth accumulating assets. So if you don't get that, if you don't get that switch in your mind, if that doesn't change, then you'll never build wealth, no matter what we do for you. You know, and that's anybody. So full circle with that. My thing is books. That's how I started, and that's what I would recommend people do. And that's because you can go at your own pace, and you can take as long as you want, right? So books, and then also courses. You got to have a mentor. You know, you got to have somebody who's done it and who's doing it to help you out. Especially if you're starting out, you don't. I mean, you can, you know, throw your money off in there if you want to, but if you got somebody guiding you and helping you along, then it's so much easier. Then you'll be able to pick up stuff faster and you learn stuff so much faster. If I had a mentor when I started out, I could have skipped, you know, 6 years of this whole game instead of learning it by myself and trial and error and you know, buying Facebook at $50 and then selling it. You know, I had Facebook when it was $50 a share, you know, and I sold it. It's at 700 and something now.
Yeah.
Now I look like a fool. But if I would have had a mentor, you know, it'd be like, hey, you know, I've seen this with MySpace or Friendster or whatever the case may be. Hold on to it, just chill out for a little bit. Then, you know, I could have been
possible.
You know,
yeah.
So it's having that guidance to help you out along the way. So yeah, that's what people need.
And you hit a key point because I was like the deep, you know, this last couple of years, like I've been playing with the stocks, but like I said, like years ago when I started, I was just buying and selling, so I didn't even have a long term. It's just like I put some money in, it go up, I'm cashing out, I'm just trying to make some money off of it. But the mentor part is key because now, like a lot of my portfolio, I'm not even gonna front. I'm not the hugest like studier. I study mentors that get how they got rich and what they get into. You know what I'm saying? I'm one of those guys that like, okay, if I see somebody talking about something like XRP, I didn't know nothing about that. I had a mentor say jump in there, so I just jumped in, and I learned about it while I was in it. But you know what I'm saying? So that's why it is to have a good mentor that you trust, because the learning curve takes so much longer when you're doing the research, and then you're researching, but you might not even know what it means when you research it. Like, so what does all this information mean that I'm even talking about? You know, like I was just looking at one that I never researched in my life. QBTS D-Wave Quantum.
Oh yeah.
I still don't. I mean, I see that it's talking about like software development and computer system software services. I still have never researched this in my life, right?
Yeah.
Mentor told me last year, get into this. I got into it at $6. My average cost is at $6.11. I bought 100 shares. It's at 1972 right now on a down day. You know what I'm saying? Just from having that mentor, you know what I'm saying? Like, so I'm really big on having trusted mentors, because I do a lot, so I'm not even going to front. And I'm always advise people to like really study, but I do study certain stocks. But I'm not going to lie and say I study every stock in my portfolio. Right. You know what I'm saying? But that's when it comes with a trusted mentor. You know, of course, you can't just go with anybody. You got to have somebody you really trust, somebody that's proven that's really been doing this. So let me say that number two, because there's a lot of people that just might tell you something, but are they proven? Have they been doing it? And do they really do it? You know, like I see this is his life. This is what he do. You know, he talked to, and I was talking to a guy the other day. I'm like, I don't like when people only get on talk about stocks on good days. The people that I trust teaches me when it's bad, and they tell me why it's bad, what we're going through right now. You know, because everybody can look like a genius when it's on green days. You know what I'm saying? Like everybody looks like a genius. But tell me why is it just crashing? Why did it pull back 10, 15%? Break that down to me. Then that helps me understand. So when it is green, I'm understanding, okay, the pullback is coming because this, and this, because I've been through this before. And then
Yep.
it helps you psychologically break it down and understand and be like, okay, well, no, I'm not buying until it comes back 10%. Then I'll jump back in a little bit, or I'm gonna cash out at this point, and then I'll jump back down if it drops below this point at a certain price. So, like having a mentor that really breaks it down. And please don't ever, if somebody only talks when it's green, that's not somebody you need to trust. They might tell you some good pointers. I'm not saying don't listen to them at all, but don't trust them fully if they can't tell you when it's bad and why it's bad. You need to have people. You need to have people that you trust that tells you that. So, and I was just looking at that because I hadn't even looked. I bought this last year and I hadn't even looked at it, and I was just going through my portfolio. I was like, oh man, it's at 1972. My average price is 611. I just bought 100 and left it alone. You know what I'm saying? And today is a down day at 1972. So I guess the highest was what 20.
Yeah, it was up to like
2042 is the highest, and that was today.
Yeah, it was like $24 the other day because it had just shot up.
Oh, see, I missed all that.
Yeah, because this was so that one is that Quantum is a stock that Bill Gates had talked about, and when it first came out, he was talking about it, and it shot up to like $70 a share or something like that, and then it dropped back down to like 6 or something. And that's probably
okay. So that's probably when he told us to get back in.
Yep. Okay. And then so I've been watching that one too, but I'm not in it right now. But yeah, I've been watching it. But yeah. So there's a lot of stuff going on, man.
But see, that's why it's good to have so now when you build up that understanding and you got people that do and trust it helps your mindset. So now I'm prepared for when I do see other stuff. Like even like with the crypto going up now, I'm already prepared because the mentors that okay, it can shoot here, but it can do a major pullback here. So be prepared for that. Don't lose your mind because it's looking all gravy now. When it do a major pullback, jump in more because even when it do a pullback, it's gonna go even farther after the next time. So you get your mindset ready. So when it happens, you're not freaked out. You're like, okay, well now it's time to dump. And when I be average costing, okay, I might put 20 in here, 50 in here, 100 in there. But when they pull it back, okay, now it's time to go double, triple of what I normally buy. Like my mentor always say, that's when it hit this certain point, back up the bricks truck. You might average cost a little change here and there, but if it hits this point, back up the bricks truck and dump. So these are the things that help me, and it's just understanding that everything ain't gonna go right, but over time it'll all work out. You know what I'm saying? Like, so it's not saying that some plays can't be right, or some plays can't be wrong, or nothing like that. But it's just building up the mindset to understand if it do go wrong, okay, this is why it went wrong. So see that, and that's the part. It's not about getting your mind right where you can everything's gonna go right. Getting your mind right. So even when things go wrong, it's understandable. Like, oh, okay, yeah, I took a loss of that because of this, and this, and I did. And when it passes certain months, I should have known. I should have got out. I should, whatever it is, I should have took the profit when it was this high. I let it run, thinking it was gonna run forever. Then it pulled back and red a little bit. So you start building up your strategies. And what you said was key because I was telling people, God, the other day, I'm like, man, you know what? The main part of this is being in it. The longer you in it, the longer you in it, you're gonna look like a genius. There's people that don't know much about crypto, but they've been in it for the last 4 or 5 years. They're geniuses for the simple fact they stayed in it.
Yeah.
The people that didn't sell XRP when it went to 20 cents look like a genius today. And they're not that they're that much smarter. They just had the understanding and the mindset that, it's crashing. Let me buy more. Let me buy more.
Yeah.
Buy more. So just having that understanding will make you look like a genius in the long run. And all those people that kept it and bought more at 20, 30 cents, looking like, and now that there's irregulated and all that, it's getting getting institutionalized and stuff like that. Ain't no telling where it's gonna go. But those people, like I'm at it at $2, but the people that was at 30, 40 cents, man, they already good and they're gonna be forever good. You know what I'm saying? So and that shows you right there. It's about having that backbone to really understand when it crashed. Don't panic. Stay cool and understand that this is the time to get more and load up more. So yeah,
for sure. And then it depends on your mentor, right? Like mentors are different. They're not all the same. So people shouldn't go into it thinking that as well. Like, so you do it every day. You're in the markets looking at stocks and stuff every day. I don't. That's not my strategy. My strategy is to just keep buying on autopilot and let it do its work. And then I do my other stuff. I don't have to worry about it. Now, sometimes I'm in there, you know, and I do stuff, and I day trade sometimes, and all types of other stuff. But for the most part, my strategy is just build it up, just let it go, and let the market do its thing. If I do nothing else, and I just invest in the S&P 500 and I average 10% a year, I'm cool with that.
Yeah.
Like, still over time with that, I'm gonna be a millionaire if just doing that. So, and if I'm in there every day, catching everything, catching some of the waves, then it goes even faster. So, people just need to find a mentor that suits them and their investing strategy and their what they can tolerate too, because that's another big thing, right? People like, oh, I lose $1, I'm out. Like, you know, it's like, nah, if you're gonna do that, you're not gonna find a mentor. I can tell you that right now, because everybody loses sometimes, you know. So it's just about the strategy that you want to take, and make sure you know your points, right? Your leverages, how much you can lose and be okay with, and how much you can't lose. Like, if you got something you can't lose, then you probably need to put it in something safe like bonds or something like that. Don't be throwing it in crypto. You know what I'm saying? So it's like, your risk tolerance. That's what it is. You got to figure out your risk tolerance, and then when you're doing that, educate yourself too. Like, certain asset classes are obviously riskier than other asset classes. So you need to know that, so you're not putting your whole life savings in crypto when you need it in 3 months. You know what I'm saying? Or you're not putting your whole life savings in stocks when you need it in 3 months. Because if you put it in stocks in 3 months, that's going to be real volatile. And so is crypto. So, and crypto is 24/7 market. So while you sleeping, you could be losing. So or gaining. You never know. You know what I'm saying? So
it shoots up and down crazy. I watches it.
Yep. So it's like, know when you need your money, and know how much you want, and all this other stuff. There's a whole lot to take into account, right? But it's worth it to do the necessary research to get to where you want to be. Like, it's just like anything else. Make a plan and follow that plan. Find somebody who's doing something similar to what you want to do, and get on with them. And there you go. After that, you just sit back and watch, or for instance, other groups, right? They got Facebook groups and Pantheon groups and all types of stuff that they sending out messages. Yeah. They send out messages. Hey, we finna get in this play right now. So then all you gotta do is be like, all right, wake up, sit in your drawers on the computer, and then do the same play, and you can be making money. So it just depends. Everybody's different.
Yeah, and that risk tolerance is definitely the key. I'm a super risky person, but I just by nature I've been like that in business. So I always try to teach a different way, because I understand. I tell people, like, my way is different. Like, I'm the type of entrepreneur that'll jump out the plane and do my put my parachute on while I'm going down already. So that's just me as a person. So my risk in the market is different, but it's because I'm going harder for, I guess, the years that I was playing with it. I feel like I let a lot of stuff make it. So I'm more aggressive right now. And I'm I'm in my early, I'm at 42. So okay, I'm aggressive from here to like 52. And then I plan to, and if I was already in it from like 30 plus focus like this, I probably wouldn't be as aggressive right now. I probably could be more chill. So you're right on the risk, your risk tolerance and what you can handle. And what I do is, like, anybody that asks me for advice, I don't even want you to put no money in the market if you can't live without it for the next 10 years. And that's just the way I teach. That, of course, you don't have to do it like that, but I want people to have that mindset. I don't even want you thinking about this money no more. Even if you do pull it out in the next couple of years, I want to teach you from a point of view where whatever you put in there, you can't touch it for 10 years, because that's my mindset. Because if you do tell people, I see that when you tell people, because I'll be like, that's how I was. Remember, I told you I messed a lot of wealth because I would get excited and sell soon as it shot up. So I guess that's probably for me messing up my potential wealth that I could have had. Anybody that asks my advice, I tell them, no, don't. Like, if you can't live without this money for the next 5-10 years, leave it alone. Don't even do it. You know what I'm saying?
Yeah.
Don't even do it, because I feel like if you listen to that advice from me, then my advice will serve you better in the long run. You know what I'm saying?
Yep.
Because if you listen to my advice and you trying to pull out the next month or two, you might be in trouble. I'm just
Yep.
gonna straight up tell you, you know what I'm
Yep.
saying? You
Yep.
might be in trouble, you know. So I don't want you to do that. I want you, if you're gonna listen to my advice, I'm gonna say, hey, nah, the way we do it over here is different. You know what I'm saying? So that's
Yeah.
and like that's, but like I say, this once again, that's your risk tolerance.
Yep. For sure.
I'm trying to save this and post it. Is that
Yeah, that's the course website. So
okay?
right now doing a pre-launch sale, so 70% off right now, and then after October when I relaunch it to the masses, it's gonna go back up to regular price, and then start marketing it to everybody. But everybody who's watching right now can get it for the pre-launch price, and then we'll have one-on-one training and all that type of stuff in there, and we'll get it done to I'll make sure everybody gets what they need, answer their questions, and then there's a whole lot of stuff off in there, some
And
videos, some bonuses, a whole bunch of stuff to help you out.
break it down. Let them know what to expect. What's your goal? Just give them a little, overview about what they're gonna get if they get into it.
So with the course, there's going to be a 6 week video course. I'm going to go, it's 17 lessons. We're going to go off in there and we're going to talk about pretty much everything to get you started in stocks. We're going to talk about your mindset. We're going to get you going with an account. We're going to talk about different types of stocks. We're going to talk about different types of ETFs and index funds and mutual funds and all that type of stuff. And it's just going to start getting deeper into the weeds. We be hitting surface level stuff, but we're gonna start really getting off in there in the course and get you what you need from. You're gonna go from beginner not knowing anything to buying stocks by the end of the course for sure, and then hopefully making your first few dollars. It doesn't have to be it, and you don't have to start with a lot of money. People, that's another misconception, right? Everybody thinks you need thousands of dollars to start. You don't. You can start with $10. You can start with $5. It doesn't matter. You can start with $1. There's plenty of stocks under $1. So, and you can buy partial stocks. So there's plenty of different ways. You don't need a lot of money to start. You just need to start. And once you start, you're probably gonna get addicted because it's enticing. It's fun. Once you get into it, and when you start making money, like for doing nothing, it's the best thing ever. If you go to sleep and then you wake up and you made however much, you're like, dang, I ain't do nothing. And then you keep seeing it compound too. The compound interest, when that starts hitting, like it's crazy. So yeah, we're gonna do a whole lot of stuff off in the course, and we're gonna meet everybody's objectives. Everybody's gonna learn something. I promise. You come to the course, you're gonna learn something. So yeah, that's what we're gonna be doing. And then we're gonna have people like you as well on there, and I'll be doing interviews with other people as well. I've had some other students already, so they got some testimonials and stuff that's gonna be off in there. So yeah, we're just gonna keep it rolling and try to educate as many people as we can.
And for a lot of people that don't understand, when you're just talking about just investing, that's great. But what I've learned to love about the market and becoming an investor, because I always led with that I'm a CEO first and then I'll invest later, right?
Mm-hmm.
And last year is when I made that turn, and in 1 year, like literally, my life has changed. Because now what I do is I'm an investor first, then I'm still a CEO and I got businesses that runs money. But soon that money come in, I got a process of where it goes and how, and I got used to just living way below my means because I'm in a heavy investor mode, right?
Mm-hmm.
So what I learned though was we always trying to save money, but most people can't save money. You save $1,000, you put it in the bank, and every time you get hungry, every time something, you use that card, you swipe that ATM, you go to that ATM. So what I've learned that investing and throwing my money like today, 40% of what I made went straight into Robinhood, Kraken, and I think a couple. And then no, I didn't put nothing in like my Charles Schwab today, but it went to Robinhood and Kraken, and I think another account. But that's money that I forget about. You know what I'm saying? So I'm not even worried about that money no more. My 50-year-old self will catch up with that money in 10 years. You know what I'm saying?
Mm-hmm.
But it's the mindset that, man, if I was like this for long, you know how much money I would have just on the savings part, even if you're not even thinking about how much it grew or this and that, like it'll help you save money. And I have I'm gonna call her a student, but I have a person that's like I was telling you last week that works at a fast food place. And She has never saved no money in her life. She just lived check to check, and she still living check to check. But the difference is now her check to check living, taking a percentage of that check and putting it a little bit in the market. For the first time in her life, she wakes up with a portfolio with like $7,000-8,000 in it. You know what I'm saying? And that's just off the a year, probably about 13 months of doing that. So she has become a better saver in the process of learning how to invest, because she would have never did that without me showing her to put that in portfolios and don't worry about it, just forget about it. She would have never did that on her own, because if she'd have put it in her bank account or she'd have put that under her bed, she'd have went back and grabbed this and grabbed that. You know what I'm saying? So now in her mind, she can't get it. So when she put it in there, she's not thinking about it no more because she can't get it. You know?
Yep. And I'm the same way.
I noticed that it helped me do that, and the people I'm teaching that's really kind of like bad with saving or whatever, it's helped them become better savers with this process.
Yep, 100%. Because I'm the same way. I can't see money in my bank account because it's gonna go somewhere.
Yeah,
I'm gonna take a trip. I'm gonna buy something. I'm gonna buy the kids something. We're gonna do something. You know, so you got to have that separate account where you don't see it, and then you can forget about it and let it do its thing. Because if you see it all the time, you're gonna be like, man, I just got money sitting there. Like,
you'll figure out something about it. You don't even need nothing, but you'll make up something.
Yep, that's exactly how it is. That's a real thing. So, yeah, having that separate account where you don't see it every day, and that you can't quickly get access to the money, or you can't. I mean, you can, but it takes a couple of days. But you can't like impulse buy. Then that's huge, man. And it definitely helps with savings because you don't look at it. So you go look at it, see $7-8 grand, you're like, oh man, I'm gonna put more because I want it to be bigger.
Exactly. And see what that had done is empowered her to even want to do it even more now, because she's like, hey, I really can do this. So now she's more bold and like, okay, I'm gonna start saving a little bit more. What it might look like this in another year or two. Like, now she's making the rule like, I'm not doing this. I'm not going to party night. I ain't buying this. So now she's becoming a more of a investing beast because of those small little increment steps of saving money, quote unquote, putting it into the portfolio and forgetting about it. You become somebody you really didn't realize. And I've always been good with money, but like, the life I live, we just put it under the bed, or we might have it in the bank. But when you got it, you got that access to it. Like you said, you're gonna find something. It's something that's gonna come up, or something that's gonna happen. Now, something come up. Hey, I just gotta figure it out, or I'll pay for it Friday when I make some money. I'm not, you know what I'm saying? Like I tell her one lady, I said, man, I'll go pound something before I pull something out of my brokerage accounts. That's just my mindset. It ain't that I can't go get it. I refuse to go get it. You know what I'm saying? I refuse to go get it. And once you build up a mindset like that, it turns you into a whole different version of yourself. And I think it's especially when you come from a low income, surroundings and a mindset where we just consumers and buyers and stuff. To build that type of mindset in those environments, you start seeing the whole world different. Yeah, and I think that's 100%. Key. Yeah, for real. So that's why I was talking about the mindset, because when I tell you, you have to jump in the game. Of course, like I said, you have to put some skin in the game. But like you say, books. Even if you're not a big book, they got audio books. If you're not into that, man, like I cook every day, right? For my brother's cooking business. Man, all I'm doing is listening to, I got a guy that I listen to about straight dividends. I got a guy I listen to about just overall the market. I got a guy that I listen to about the news and how the news, you know what I'm saying? So I got people that teach me different points of it. And some people might find one person that's good for them. I like different perspectives, so I can, you know what I'm saying? So I can weigh it. And then I still end up making mine, but I have became who I became in this market by listening to different perspectives. And it helped me become, and sometimes people don't agree, but it ain't even about that. It's about, I heard different perspectives. Now, me personally, what do I want to do? It's not even about listening to everybody all the time. It's about listening to different perspectives. And then, like you said, knowing your risk tolerance, knowing who you are, and you making a knowledgeable decision off what you have heard.
Right.
So that's what I'm big on. So yeah, like we definitely got the mindset in the market. If you can switch your mindset, because everybody got it. I always say that I don't care how quote unquote poor or broke you is, you can find $5,000 to $10,000 that everybody blow. Everybody. I don't care if you working for $10 an hour. I can still go through your budget during the year and find $5,000-$10,000 that you just threw away. You know
Yeah.
what I'm saying? And if we can stop you from leaking that, and once again, that's the mindset. Because are you willing to do what it's gonna take to stop leak that? Are you willing to go without those little fast food meals? Are you willing to go? Because they look at it like, all I do is I just go to McDonald's, I just go here. Yeah. But
Yeah.
when you at this threshold of payment, all that count. If you go to Starbucks
Mhm.
to somebody that makes a more money, that ain't nothing. But for you, though, that's $6, that $10, that's damn near $100 a week. Do you know what we can do with $75 to $100 a week in the market over a year
Mhm.
period?
Mhm.
You know what I'm saying? And
Yep.
all you got to do is not drink this, or all you got to do is go home and cook a little bit, eat some leftovers. You might, you know what I'm saying? I might cook some on Monday and eat it Monday and Tuesday. You know what I'm saying? If it's something left over, I might eat it Wednesday. And that don't sound fun. But this is how
Yeah.
you get over the hump when you at a low income. And see,
Mhm.
that's the mindset that we got to have. We can Anybody can do it. Of course, if you're making big money, you just gotta get your game right and invest. I'm not even talking to you. I'm talking about the people that say they can't do it because, well, I
Yeah.
don't make that much money, or I don't got this. I promise you, I can show. The lady I'm showing now works at a fast food place, and she become a better investor in a year than some people that make $50,000 a year, $100,000 a year, just because of
Mhm.
the way her mindset is switching now. And
Yeah.
she keep up this, or if she keep up at this level or even go higher, she'll be doing better than somebody that's making six figures in the next 5 years. You know what I'm saying? Because you can make six figures a year for the next 5 years, but if you bad with money and investing, the person at
Mhm.
McDonald's could be doing better than you in 5 years just by
Yep.
keeping that same low paying job, but they're a better investor. That
Yep.
that's how this stuff switches. So we always talk about I need to make more money. And of course, we all need more money. I want to make more money so I can dump more money into it. So I get that part. But if
Mhm.
you can't even control what you got right now, more money is not going to help you. I promise
Yep. Nope. Not at all. It's gonna make it worse, actually.
you. Yeah, real.
Yeah. And what you said is true, man. Like people downplay it because it's not fun. Like you struggling ain't fun either.
Yeah,
So you gotta, either you finding a way to get out of your situation, or you just,
yeah,
throwing all the dirt out and staying in the hole. You know what I'm
yeah,
saying?
yeah,
Or you can put that dirt to the side, build some stairs, climb out of your hole, or you just
yeah,
keep throwing it out.
yeah,
Like you got to figure out a way to get out of your situation. If you're, well, pretty much anybody, if you want a better life, right? If you
yeah,
want a
yeah.
better
Anybody,
financial life,
for
it
sure.
doesn't matter if you poor, middle class, higher class, whatever. Like if you want a better life financially, then you got to invest. Like that's just the history of the world. Like unless you were born into it, people don't have money just like that. There's not um, a whole bunch of people that have CEO jobs making millions of dollars a year who, one, didn't have parents that were connected like that, and two, didn't get to go to a really high profile school where they could rub elbows and meet all these high class people for these jobs. So like once
And,
again, it comes down to money. you
and one
know
out of every four millionaires live check to check. So one out of every four millionaires still broke. They make more money, but they're just like the person at the regular job. They just
yeah.
at a higher threshold because it doesn't matter. Because if you make a million, but you live like you make, your lifestyle is 1.2, 1.3, you're broker than the person at McDonald's because you're in the hole 200,000-300,000 every year. You know what I'm saying? But
Crazy.
it just looks different because you make more money, but
Yep.
technically you're worse off.
Yep.
Technically,
Yep.
that's why they have. I haven't watched TV in years, but I used to watch this show called the it was how they got the regular repo show, but there was
Hmm.
like the luxury repo. Like they was
Hmm.
repoing private jets and letting you know that rich people go through the same stuff poor people do because
Hmm.
they're living above their means.
Yeah.
It's the same principle.
Yep. More money doesn't fix money problems.
Yeah, yeah.
That's
That's a fact. So when we talk about mindset, it's definitely like, man, I love what we build, and I definitely ready for the youth project that we do, and like I say, just continuing these talks and really are ready for your course to come out because people we need this and we need accessibility to it, and we need to take pride in like, especially where we from. We should not have to, I ain't gonna say beg, but we should not have to convince you that you should want something different. That should be an easy fix, right?
Yep.
Because what we realize, and you should, when you said low income, middle class, or rich, I'm gonna just be real with you. It's rich and poor, and in the next 5 years, it's really whatever, however bad you think it is now, it's really gonna be like that. And that's why I'm at a state of emergency because when I see the financial people I listen to, the people that's at the top of their game in these finances and the markets and everything, they're like, hey, you need to ring the alarms to the people you talk to. Like, I know they might feel like it's tough now, but if they don't get into some of this in this game, like it's gonna get crazy. The middle class is gone. The middle class is already busted up. You know, even a quote unquote middle class person can't they can't
I
miss,
don't know.
they can't miss a. You tell me a middle class person that can miss a couple of weeks or a month of work,
Me,
they'll lose everything.
me, me.
No, because now I see most middle class.
Yes,
Where's most middle class people of wealth at?
most middle class. I agree with that.
Most
I,
middle
I
class
still think
people
there's.
wealth is in their house. That's what
I
they'll
still,
tell you.
yeah,
That
that's
will push
true.
them in the middle class.
I
They
still
don't
think
have
there's a middle
portfolios. They're
class.
not investors. Most people do not invest in the stock market.
Correct.
Most people that consider themselves middle class, they got a good job. They got a retirement check, and their wealth is in their home. That's why they consider themselves middle class.
Yeah, but I'm obviously I don't consider myself middle class because of that reason. But I think there still is a middle class, but I think it's small, a lot smaller than it used to be. And the only thing with that is that I say that because there are more people starting to invest now, right? And there are more people that's now coming around to the idea like, all right, I can't do this my whole life. Like I need something, especially when people talking about Social Security going away and all that type stuff. You know, when people were relying on that for their whole retirement plan, and that's never what Social Security was meant for. Social Security is supposed to be part of a like three-legged stool, I think is what they said. So that like a 401k and investments. So all three of those is what's supposed to make up the American retirement.
Mm-hmm.
But people don't invest and people don't hardly put anything in their 401k. Why? Because they're living check to check. Now, these companies that people work for, they don't offer financial classes. So they're not helping their people, right? Now, the big companies that do, most people still don't invest. And then big companies also, they like match people and people don't even take advantage of that. So if you working for a company and the company's like, all right, if you put in 5%, I'll match 5%. Now you put in 10% of your money and you only putting in 5%, you making money like crazy. But people don't even take advantage of that. It's crazy how many people don't take advantage of that. So you're just giving the company more money. Now they're like, okay, we'll keep this money. And now then they upset when the CEO gets bonuses. Yeah. Like, oh, you just gave that money away. That's why they're getting the bonus. They say the company X amount because nobody's taking this 5% match or whatever the case may be. So we got to give it to somebody or it's going to taxes. Yeah. So we're going to give it to the CEO. Now you upset because you downstairs in the mailroom and you're not investing and you could have been getting 5%, a year or a month or whatever matching. And in 10, 20 years, you could be legit retired if you wanted to be, but you just salty because you're not using the tools that you've given. Now, I'm not saying all companies do that because I don't believe that at all, right? Yeah. But it's on you as well to make your financial future better. Oh, like yeah. we can't keep relying on other people to tell us what to do, right? At some point, it's got to be somebody like, all right, I see these people making money. I see these people doing something different. How can I do that? How can I go talk to this person? How can I get involved in real estate? How can I get involved in stocks? How can I do life insurance? Whatever the case may be, You got to do something. So I hate the victim mentality that most of us have, like, oh, for us, you already know. So it's like our grandparents, right? They had Social Security and that's what basically all they had. And they were fine. But that was a totally different time. Yeah. You know what I'm saying? That's when Social Security was at least enough to live off of. Yeah. It wasn't the best, you're still kind of struggling, but you were all right. Mm-hmm. You can't do that today. If you go out and do that now, yeah. If you go out and do that now, I mean, Social Security now for a retired person at 65, you're looking at like, well, if you do it early, which most people do, they do it at 62 instead of 65, and that's only getting you like $1,500, $1,600, maybe $1,800. Maybe let's go $1,800. $1,800 a month. Now, you telling me that's going to cover your mortgage, because most people still have a mortgage at that point, right? Going to cover your car note, your insurance, your life insurance, all your house bills and all that. $1,800.
That's why you can Google a thing right now. It's called 2 or 3 time retirees. That's people that retired and have to go back in the workforce after they retire because their retirement wasn't enough. And like now, like even with the houses, like when people say their wealth is in their house, for a small percentage, yes, but most people with those mortgages will never pay them off. That's the reality.
Mm-hmm.
You know what I'm saying? And so that's why I hate when people like try to like, and even some of these, like I don't say nothing because whatever, like the credit people and stuff like that, when they say I'm trying to get your credit right so you can get you a house and all that.
Mm-hmm.
That's really not the wealth. I ain't gonna say wealth. That's really not a way to put your family in position until you're in the right position to do it. If that makes sense, you know what I'm saying? Like when you talking to a person that don't know nothing about money, and all you want them to do is get their credit and pay a mortgage, that person 8 times out of 10, 9 times out of 10 is not going to pay off that 30-year mortgage because the first 15 years is interest. They don't even you don't even start paying off your, And when I I have literally gave people this information and said, I don't think it's the right time. Once you go buy a smaller house, once you buy a fixer upper, this and that. Oh no, I want to stay in the cul-de-sacs and this and that, right? And I don't know one person that ever paid off their house in that situation. You know what I'm saying? Because we want what looks good. We want the quote unquote American dream instead of asking ourselves, what is the reality of this? What is what should I be doing right here in this time? I know it looks good and it sounds good to do all this, but won't I was telling the lady, I'm like, well, you're gonna use your FHA loan or whatever, your first time home buyer. Won't you buy an investment property with that first and you can get you a 2 or 4 unit and stay in that like that? But that looks too like you're broke or something. But that's the way that you can get yourself in the right position and let that buy you a house.
Yeah.
If you want a house that bad. So like I think even the strategies that I see a lot of people, and I'm cool with some people, but a lot of people, it was a back and forth about a guy was telling people that buying a home is buying for most people. Because we never just blanket saying everybody, right? It's always people, you got your money right, you got your situation right, you know what you're doing. We're not talking about you. We're talking about the everyday Joe that don't know what they're doing, but somebody told them to go buy a house. That's most of the time that's a bad strategy, because like I say, most people do not pay off 30-year mortgage. That's a fact. You know what I'm saying? So I don't know why that statistic never comes up when all these people trying to push people into homes. Most of y'all will never buy that home and then now the home that used to cost what, $200,000, $150,000 5 years ago, that's $300,000-$400,000 for that same home right now. You know what I'm saying? And then we didn't even talk about the interest and all that. So it's like you're paying. It just won't work. Won't buy a fixer up, and want you use your money to get an investment property. And if you want a house that bad, then let your investment property. We just need to figure out the different strategies that really going to have people better off in the long run, instead of telling them what makes them feel good and telling them what looks good. Because this is me personally, and you said $1,800 a month. I don't know nobody that gets that off there. I know people that get the 1,000. I know people that get the 1,200. And I'm not saying that it's not people. I'm talking about personally. I don't know those people that gets the 18, 2,000, 2,500. I don't know those people that get that much. The people I know.
I don't know people get over 1,800 is the most I've heard people get.
I got partners that's 70 years old at the house with their mama right now. They get $1,100 a month, and they went to the army. They was in the army and everything. At 70 years old.
I can tell you that. I said they messed up. I can tell you that.
For sure. But that's what I'm saying. That's the reality of most people. Most people are going to mess up in life, though. That's what I'm saying. Without the right financial, so we could tell people this and this, yes, for the right people in the right situation with the right mindset, that works. Yeah. But for the people I see that don't have the information, don't have the knowledge, gonna mess up. No, that's not the strategy for you, and that's the majority. It's more of those people than it is the people that didn't mess up. You know what I'm saying? Like I got an uncle, my Uncle Frank. He's living good. He went to the army. He's one of those people you're talking about that did it right, and he's good. He's not the person I'm talking about right now. You know what I'm saying? Yeah. He got a nice home. He living life on his terms. He go wherever he want to do what he want to do. He's not worried about nothing. He did it right. I'm talking about the majority of people that just ain't. because they didn't have the finances right. They probably was on alcohol, drugs. They got divorced because of this. They, I'm talking about the majority of those people that I deal with.
Yeah.
That's not the right strategy. And it's not saying that just because you messed up, you can't get it right. But if you messed up, or you get a late start, or you did all these other things, you have to have a different strategy. You can't use that same strategy that
right.
You did it right, so he could use that strategy. You didn't, so you need a whole different strategy.
Yep.
The people that teaches everybody the same strategy. That's the problem I have. You
exactly.
can't give everybody the same strategy.
Nope. Not. That's why. So the thing is, like, that's why these so-called gurus, right? Like, they try to get as many people as they can and tell them, like, this is the strategy, this is what you have to do. And like, no, that's not it. Like, it's the same strategy is not going to work for everybody. Like, the same strategy for a 20-year-old is not going to work for a 40 or 50-year-old, right? Because the 20-year-old has way more time for their money to compound and build than the 40 or 50-year-old do.
They can mess up in everything. They got plenty
right. 3-4 times and be fine.
Yeah.
Like, so the strategy has to evolve. And if the person is only on one strategy, then you know that all they know is that one thing. If that crumbles, so for instance, real estate, right? With the whole bubble thing, when real estate crashed, all the people were gone. You didn't hear people talking about, buying apartments and multifamily houses and all this other stuff anymore. You didn't hear the people with, 17 single family homes out here doing anything. That's because they was underwater. Yeah. It was hurting, Now they have to sell these properties and all this stuff, foreclose on, bankrupt, all this stuff. That's why so many properties and stuff was sold so cheap, and everything was going on because people got over leveraged, and they felt confident, like, okay, yeah, this is gonna go on forever. I ain't really got to worry about nothing, and that's not the case. So fortunately for that, with stocks, that's not the case. You don't have to worry about that. You don't have to worry about being $2 or $3 million in the hole, from the jump, or just because you got however many houses or whatever. So, and it's different. It's just different. So I like stocks. I like real estate. I like it all, but stocks, in my opinion, are the easiest thing to get into. Mm-hmm. It's because it's the cheapest, it's the easiest. And now with computers and everything, the access is there. There's nobody who can say that, oh, I can't do it. Oh, I gotta do this. I gotta do that. Like, no, you got internet right there on your phone. Yeah, like, you can do it from the palm of your hand.
They made it super easy. And I don't know what year, but I know you hadn't always been able to buy like pieces of it, fractions. Yep. You know what I'm saying? So even there, like you said, $5, $10, if that's the way you get started, because that's how I started. I wasn't buying full shares of nothing. I put $100 in there, 10, 10, 10, 10, 5, you know what I'm saying? 20, 20, 20, or whatever, you know what I'm saying? So that's how I started. And then I started learning, okay. Remember, I told you one time, I said, man, I think I got like 60, 70, and I knocked it down to like 35 or 40 or something. Like, I think it's like 35 now, because I was just in it, but that's what I say. As long as you get in it and you're knowledge, you're searching after the knowledge, you'll get better at it. You know what I'm saying? The whole key about it is getting in it and being dedicated to it. You know? And I'm proud that I'm coming up on my first one whole year. No, this is my second year. No, this is my first year, because last year when I shut down the school. So this is my first year. I've been messing with stocks since 2018. This is my first full year that I just bought and didn't sell one thing. I've never done that. You know what I'm saying? Yeah. I'm telling you, I'll buy, sell, buy, sell. I sold what, like I told you, when I shortened my portfolio, but I sold strategically just to get that, just to cut the fat. But like, just buy and sell and get out the market. This is the first time since I got into the game that I didn't get out the market. The ones I did so is because wash that out and put that into this. You know what I'm saying? Like, I haven't pulled out nothing in a year. This is the first time since I've been dealing with stocks that I haven't pulled no cash out. All I've been doing is dumping in. So, so like I said, I'm still a baby in this game. You know what I'm saying? I'm like, but to create with my formula for my small pieces of change to build a 6-figure portfolio like that lets you know. And I'm always told, like, but you don't work for nobody, this and that. How you gonna retire? I said, well, I got properties, I got other things, but what I've done in a year is what building a 6-figure portfolio. People, you have to work 20 plus years to get that in your job. You know what I'm saying? So, and that's why it's important, like you said, if they match and do all that. But if you can do that with your job and do it outside of your job, that's what I'm gonna advocate for, because I don't want, because all your job is doing is what I did this year. All they
Yeah.
doing is they figuring out where they gonna put your money at. They gonna give some to the people that's buying a new high rise downtown. They gonna put some in some stocks. They gonna put some in some insurance. You know what I'm saying? But I can do all that myself. You know what I'm saying? So yeah, if you got somebody matching, of course, that's a winner. But even when you're doing that, start putting your little stuff to the side and say, you know what, I'm gonna build my own portfolio outside of this job. And I guarantee you, if you do both, if you working somewhere and somebody's matching, you doing that, do it. But if you do something outside of that, man, you'll be 10 times farther than anybody that you're retired with. Because when I put my money in, the jobs wouldn't have did that to make my money grow like that. You know what I'm saying? They wouldn't have did all that. They're more safer. They're more this and that. You know what I'm saying? They do it. They have a different calculation, most jobs. And it's not just saying that you. And my thing is, even if some people retire for what 100, 150,000, especially around here. You know, I'm speaking around here.
That's crazy. That's not enough 20, 30 years.
Yeah, man. I talked to a dude yesterday when I was serving plates, and he's excited because he hit his 10-year mark, and they gave him $1,000.
Okay.
For 10 years. He don't invest. He don't do nothing. So he's an older cat. He's probably like 40. So he probably been like 50, like 54, 55. And right there, that crushes my heart because it's like, I know how that story gonna end. I see it all the time. You know what I'm saying? Yep. The dude that just gonna work to the day he cannot physically work anymore.
Yep.
And when he leave that job,
they're gonna find somebody else.
They're gonna find somebody else younger. They can pay less. The insurance will be less. Yeah, I had this conversation with my big dog because he always be hitting me up. He like, man, you told me 20 years ago what you're gonna do. I'm so proud of you because when I used to overnight stock at HEB, he was like my manager, and I used to tell him all the stuff that I was gonna do that he see me doing then. So he always salute me on that. But I used to tell him, man, once you doing this, once you start doing this, once you do this, he was like, nah, man, you know, HEB. He thought he would be there forever. The man worked at HEB for 22 years. Wife got sick. He missed a week of work, and he got fired. Now he's getting his barber license and starting all over again. But if he'd have did what I told him back then, I said, man, you might not be able to cut every day, but get you a barbershop. Well, you might not be able to do this, but invest. You got this HEB money come in and start putting a piece of that to the side. And now he's starting all over, and he's older than me too. He's got to be close to 50. You know what I'm saying?
Yeah, that's the HEB money was good, boy. I used to love working there.
That's what I'm saying. but that's the thing. When you get that good money, that's the key time to really do something with it.
Yep. But you think it's always gonna last.
Yeah,
I mean, you know, it's the same thing with like pro sports players, right? Yeah. They think the money's always gonna be there. They think they're always gonna have an endorsement deal or whatever the case may be. They have money coming in, and when they don't, they go broke.
It's a wrap. You know what I'm saying? So, and that's the thing. Like me, I could have, man. I had hundreds of thousands that I touched. So it's not that I'm like the person that can tell, but the difference between me and them, I was always been an entrepreneur. So it was just the ebb and flows of being an entrepreneur anyway. But when you at that one job and this all you know and this and that, that's a little different because entrepreneur, you can mess up for 5 years, 10 years and hit gold and be out of this world. So, but that job, you just working that job. It ain't that's a ceiling. It ain't no hitting no goal and being out of this world. That's a different beast. So that's why I try to always just like my nephews and them, I'm on them heavy right now because it's like, man, if I'd have had an uncle when I was 10, if I'd have had an uncle when I was 12, giving me this game and trying to set me up, you know where I'll be at in life right now. Yep. You know what I'm saying? Like I'll be telling you, y'all don't understand how good y'all, how better y'all got it. Y'all got people that's really trying to build wealth. Y'all got people that's really giving y'all the game, that's really setting up y'all portfolios at this age. Like you say, it ain't even got to be nothing major. My nephew 10, if I just throwing $1,000 in some stuff, if I don't do nothing else in 20 years, he'll be different than I was at 25, 30 years old. Just that, you know, like we talk about the mom with a bottle of Coca-Cola stock or something like that, you know. And I was reading on Warren Buffett the other day, the CEO of Apple makes I forgot how many million, like 10, 20 million a year. And Warren Buffett makes $2 million a day off Apple. He's an investor in Apple. You know what I'm saying? He don't have nothing to do. He's not the CEO or nothing. He's an investor. He makes more than the CEO. Quadruple more, like way more. Like, you know what I'm saying? He makes like $2 million a day being an investor. And see, that's the stuff we don't. We everybody want this corporate job. They want this. They want that. Instead of just being an investor, you can make more than anybody that works there.
Yep.
If you put the money in the right position over the right amount of time and really build up yourself. And that's why, like I'm not I only had a handful of jobs in my life, but I always tell people, no matter if you got a job or if you're an entrepreneur or whatever, my strategy that I figured out later, I was wrong because I was an entrepreneur first instead of an investor first. I believe even if you had a job, if you're working at a job, I feel like if you an investor first at your job, you're gonna be good. If you're an investor first as a CEO or entrepreneur, you're gonna be good. We have to start being an investor mindset first. You know what I'm saying? Because if you got a job, you got an investor mindset, you're gonna think different about your check. You're gonna think different about your percentages of where you. So just I don't care where you at. And then I keep bringing up my student. I might bring it out one day. I don't know if she want her business out there. You know what I'm saying? Yeah. But she's gonna be so much better because she's an investor now at a fast food place, but in her mind she's an investor.
Yeah,
you see, so just that little switch changes your whole life, man. And that's the key point. It's not about how much money you make or this and that's the mindset of who you become while you make money and what you're doing with it.
Yep, 100%. I'm trying to. That's why I got my kids on it now too. They got their own accounts, and we look at it and we go over like, oh, you hold, this is what you got, and this is why. Or we'll be like, okay, what you want to buy, Disney, Apple, what? We buy products we use. So that's one of the things I teach them. So they got Apple, they got Microsoft, Sony,
They're going to be so much farther than normal kids.
Yeah.
Because and they might not even fully understand, but just having those conversations puts them away ahead of other kids because we don't have them conversations. I ain't never had to I ain't start talking to my mama about stocks until I was trying to tell her to buy some. You know what I'm saying? In my 30s, damn near 40s. That's the first time we had a conversation about stocks. So that's why I started the CEO Youth League, because I wanted those conversations to start being normal to kids, even though they might not get it when they first start hearing about it. But the point is they heard about it and it's a seed planted. And they be like, oh man, this guy used to tell us about this type of stuff. I can't even tell you that. I can't tell you as no kid, no teenager, no, in my 20s that it was a guy or guys in our neighborhood talking about stocks, investment. It wasn't nobody like that around. You know what I'm saying?
Talking about buying cars and shoes and clothes.
Yeah,
all depreciating
vacation. You know what I'm saying? Turn up this weekend, this and that.
Yeah.
So just the conversations, and I think that's more key than anything, just starting the conversations, having the lingo out there. We talk about football, we talk about music, we talk about all the stuff that go get most of us nothing. You know what I'm saying? It's a little pastime, a little friendly gambling or whatever. You betting on a team or something, but as far as life, most of the things we talk about are gonna get us nothing. So at least these conversations, if it don't do nothing, it plants seeds for you to do something, And that's why, that's why I try to show a little bit more, I don't mind showing my Robinhood account because that's what my brother, he's like, why you be posting? I said, because that's my Robinhood account. Anybody that I teach, I show them that account anyway. Yeah, so
it's always available. It's on my phone. I just pull it up.
And I did that on purpose, you know what I'm saying?
Yeah.
So I'm never gonna show my main ones, but people have to see it. What I'm saying? I can't get the people that I'm going after to get into this world if they don't see it, that it's real, because what they go after is because that's real, even though it might be the worst. I went to the streets because that's what I could see every day. I didn't know that that's the worst decision ever. I didn't know that I could be in the penitentiary. I didn't know none of that. I just know that, oh man, boy, getting it. He got a car. He got this.
Yeah.
You know what I'm saying? He's not hungry. His bills paid. I just saw that and I ran with it. So we have to match that energy and show, no, this money over here is way more money over here. It's way better over here. If you get the knowledge and you get the skill set, you'll be way better off than anybody that you see over there with the look. That's temporary. They might be balling for a year, but they'll
go down. They go down, boy.
Yeah, you know what I'm saying? So won't you struggle while they balling for a year, you struggle for a year and see who's doing better. You know what I'm saying? That's what you do. So like I say, it goes back to the mindset, man.
Yeah, for sure. Because I'm trying to get my goal is to have my kids at $50,000 when they graduate high school. Yeah, that's what I want in their brokerage accounts. And then once they start working, I'm gonna make them open up IRAs, Roth IRAs, and then I'm probably gonna put the money in there for them every year. But I want them to feel like it's them, like they doing it. So all that. They any
it.
money they get, they have to put some money in their stocks. They know that.
Yeah.
So sometimes they upset, but they'll be all right.
No, for real. But you got to build it up, is because how's it going to change if you don't build it up?
Yep.
And that's the thing, especially in our community, we kind of like baby the kids and want them to just have fun and let them live their kids. They just know. That's why I say the CEO Youth League, because I look at them as, man, y'all about to be adults in a few years. That's how I look at our kids. Like, you're going to be adults soon. So, of course, I'm not going to treat you like an adult on every level, but you have to be preparing for it. You got to be preparing to become that adult. And that's why we have a lot of kids. We have a lot of youth that's reckless when they youth, and then when they 20, 30, they still reckless because they never got out of that kid stage. You know what I'm saying? Nobody ever really been. And then I hate the phrase that, oh man, I changed my life, because I get asked that all the time. What did you went to prison or something to change? No, I ain't went to no, like, we got to stop acting like that's the only time you can change and want to better yourself and want to do something better. You got to go through some traumatizing or some jail stuff. No, you can wake up one day and just be like, I need something different. I want something different.
There's a better way. Right?
Yeah. You know what I'm saying?
See somebody else doing it. Like, why can't I do it?
And that's the big thing, man. So, that's what we saying. We're going to wrap it up. But give us one more time. Let them know, to go to the Investment Edge and what to expect. And you said 70% off right now. Just give them one more wrap up on that as we close.
Yep. The Investment Edge, the website's right there. You can order right now for the pre-launch. The pre-launch 70% off. So you can get in right now. That's only going to be going on for about a week or so. And then it's going to go back up to regular price. And then we're going to shut it down for a little bit to get them, do the pre-launch, get everybody in the beta, get everybody right, and then we're going to relaunch it at normal price. So if you want to get in now, 70% off. It's a 6-week video course. You're going to have lots of resources for stocks and different things like that, investment journals. We got a whole bunch of stuff off in there. We're going to be doing, got some bonuses, got weekly calls. We're going to be doing videos and interviews with other people who are in the stocks and different finances. So yeah, it's going to be a real good event. Just going to keep it going, trying to educate as many people as we can.
That's what's up, man. I'm definitely going to be tapping in, man. So this is another episode. Tonight, we just wanted to get you the mindset. We can get on here and talk different stuff, but no matter what we say, if you don't get your mind wrapped around it and get your temperament ready for it, it's gonna go over your head anyway. So a lot of the times, we got to just talk about the mindset and how you think about it and how you deal with the ups and downs of it. So that's why we focus on that tonight. There's been another episode of Wealth Gangster. The family up in here, man. We'll see y'all next week. We know we normally go. Well, I guess we're going to normally be on Wednesday. Yesterday I was stuck in traffic in Austin trying to get back. Everybody know how Austin traffic is these days. You know what I'm saying? It's like a baby LA now. You know what I'm saying? So that's why we went tonight, man. But I appreciate fam for making time to so we can still get it in this week, because I didn't want to fall off. I know we took some months off, so I want to keep this going. So that's why we just did it tonight, man. But thank everybody that tapped in, like, share, subscribe, and we'll see y'all next week. Peace.
See ya.